As we close with our final episode of the year, Greybrook CEO Sasha Cucuz reflects on the year's defining highlights and lessons and shares expectations for the year ahead. Hear his insights on key takeaways and what lies ahead as we wrap up 2025 and step into 2026.
Sasha, welcome back. Another episode of Boardroom Brief. It's our last episode of the year.
It is.
We are approaching the end of 2025. It's been an eventful year for Canada. Okay, we had a federal election, 3 bank rate cuts, inches away from becoming World Series champions.
You had to remind me.
Yeah, now I know what a leadoff from third means. I never knew before now. But on the housing market front, it seems like we're reaching some semblance of stability when it comes to pricing and volume. And I think for myself personally, at least I could say like, it's starting to feel like as we head into 26, the wind's at our back a little bit. For you personally, as you look back on 25, what are some of the most memorable moments for you when it comes to the firm that make you think, this is what we do and why we do it?
I would say, first of all, there's a very slight wind at our backs. I wouldn't go as far as saying it's a gust yet.
Sure.
But definitely, it feels like there's some positive elements that are finally starting to percolate to the top. To answer your question, I think, obviously 25 was a very tough year. Like it was a tough year for real estate markets. It was a tough year for Canada. Lots of change, lots of uncertainty. Normally when you're asked the question of, memorable moments, you want to think of all the great and positive things that happened.
Sure.
I think in a year where there was a lot of adversity and challenges, the silver lining is, watching our team rise to the occasion and do everything possible to try to manage risks, to try to find opportunities in difficult circumstances. And I think it teaches you a lot about the people that we're very fortunate to have at this firm, yourself included. That's really special. Like when you build a company from kind of the ground up, and we've now been at it for 20 plus years, watching people grow and encounter circumstances that they haven't encountered before, right? Markets haven't been this difficult, in the past,
Yeah.
and having to see different circumstances, react to them, pivot into different opportunities, and watching people that have been here for a short time or a long time come together and try to solve problems and try to get to the best outcome possible. I think, for me, you feel like a proud parent sometimes when you watch that. But I think we did a fantastic job given the circumstances, and I think that was real special and something that I think we'll continue to build on into the future.
Yeah, I think I'd echo that even just myself personally, it's being here almost 4 years, right? And people always say, oh, it's the people, it's the culture, and like, what does that really mean? And I think for myself, I define it as like everyone else's like biggest cheerleader, whether it's asset management or capital markets or whatever it is. We're constantly sort of like looking at each other, cheering each other on. And I think in like times of adversity, that's the time where it's defined, right? And if you look at 2025 as an overall year, is there like an insight or lesson that really stands out to you?
I think in terms of a lesson, I don't know if it's a lesson as much as really understanding how important resilience is in it's hard to explain, and I'm not going to do a good job of explaining it. It's not just in the people, it's in your own thesis and your own, like, this is when your investment thesis gets tested.
Sure.
Right? And you have to ask yourself whether you got it wrong, whether you think you've got it right, and you just have to kind of ride it out. I think for us, we're definitely in the latter camp, and I do think we have it right. I just think that we need to be patient and resilient through some challenges and some headwinds. I think that was the biggest lesson. If I were to add an observation, I think,
Sure.
we always have believed that if you build the right type of business and you have success, who you are in the ecosystem will matter, right? And I think you are learning that a little bit in how, when there are challenges, how banks choose to deal with you, how your partners choose to deal with you. And I think, we as an organization have always prided ourselves on being the utmost professionals, but also high integrity, do the right thing. And I think that's mattered a lot when it comes to how we interact in more challenging circumstances. And I think that that's been an observation that you always hoped would be the case if you ever encountered it. And we were lucky enough, not to really encounter significant challenges until the market, we've had over the last couple of years. But I think that that was one observation I was very pleased to see, since we had to deal with it, I was pleased to see that that's kind of how it played out. I think we had many things that we were able to deal with, that, if we were different people at a different time, and
Yeah.
then maybe we wouldn't have been able to deal with them.
Yeah, I think it's the way you foster and manage relationships, right? At the end of the day, whether it's our lenders, our investors, our building partners, those relationships are still very sound and intact.
Yeah.
And I think what you're saying speaks to that.
Yeah, and it's about, like, I mean, if you do things well and you have a good reputation and a good track record, then people want to do business with people who are like them, right? And so when you're dealing with lenders, when you're dealing with partners, um, and you're having to solve problems, it's not adversarial at all. It's more trying to find creative solutions. And I think that that's one thing that happens when it's an entire market downturn, right? As opposed to like a specific issue. Everybody has to try to find a solution because everybody's in the same boat. So it tends to be more collaborative than maybe at other times.
Okay, and now when we're sort of looking at where we sit today, obviously there's still a lot of moving pieces, a lot of things still up in the air. But if you're sort of thinking a few months back and you're thinking a few months forward, what's one thing that you feel better about today than you felt about a few months ago? And on the other side of the coin, what's one thing that you think still needs to improve?
I think maybe in a past boardroom brief, we talked about policy and the direction of policy and all that kind of thing. And I do believe that over the past year, the fact that we've had as an industry, as a country, to deal with a particular set of challenges as it relates to the real estate market, it's forced all of the different stakeholders to have to look at the problem in a collaborative sense, just like what I said a minute ago. That's something that is not, or has not been, that common through the course of my career, right? So city, province, federal government, private sector, we may not always agree on exactly how we need to get there, and what, but everybody's listening to one another, I think, more than we've seen in years past. So I think that's something that's gotten better.
For sure.
I have as to what needs to improve, I'm a big believer that one of the biggest catalysts, in addition to kind of, we need some relief on the cost side, we need, different, maybe interest rates to come down a little bit further. Like there's some real things that need to happen, but I think one of the big ones from my perspective is consumer confidence. I think in the real estate market, in equity markets, in any type of investment, I think people need to feel confident, especially in the housing market, right? If you're somebody who, for example, is looking for a new home and you live in an existing home, you need to have the confidence that you can sell your existing home and that you can sell it at a price that you find acceptable and within a time frame that you find acceptable. Right now, that confidence isn't there, and that then has a ripple effect through new construction. Whether you're thinking about making an investment, people are thinking, well, is there more downside? Is now the right time?
Yeah.
What happens tomorrow? What's going on macroeconomically? Like, so until there's some sustainable confidence that comes back, and it starts with the hard data, then the news cycle and things like that, I think that that's something that will have to, almost as a prerequisite, improve in order for the market to start reestablishing a more stable upward trajectory.
Yeah, it's like timing the market in whatever capacity one tries to in a time that we're in right now, where one tweet could literally set off a chain event that can move markets. People are naturally hesitant.
Yeah. And normally I would say real estate does not suffer from the same fate that equity markets sometimes do, because equity markets are more liquid and typically real estate markets are not. I would say that the particular set of macroeconomic conditions, high inflation followed by high interest rates, followed by, higher household debt levels, things like that, I think are particularly damaging to real estate and real assets.
Yeah.
Like if you look at the world today, the stock market, we can all debate whether it's 7 names that
Sure.
carry the day,
S&P
but
7?
yeah, but equity markets have generally been performing well, and real assets, not just residential, but like office, industrial, all the different food groups have been performing uh, poorly on a relative basis. And the reason is that the macroeconomic conditions, right? High inflation, high interest rates, tightened credit, all those things are particularly damaging to real asset classes, like
Sure.
anything that cash flows and requires sort of, its future appreciation to be a derivative of the cash it can generate. When your carry costs go up and your rents can't pace with those carry costs, that's usually not a good equation for those type of assets. And the conditions that we've seen have been particularly damaging. So I think as a result, what needs to change is that dynamic and the confidence that comes thereafter.
Yeah, and you'd hope the leaders at the helm of some of these things that have the influence on it will use 26 to return some of that confidence. Let's look ahead at 2026. So when we look at 2026, the year ahead, what are your top hopes or expectations that you want to see materialize?
I would say one would be a resolution to the current trade crisis. There has to be some resolution to that, just for the sake of certainty. I think people it's very hard to make decisions when you're uncertain about the future. It's very hard to make investment decisions, very hard to make
Yeah.
purchase decisions like homes in our business. So I think that that's a big part of it. And that would be kind of something that I would hope and expect for 2026 to have some sort of resolution, because I think it'll go a long way in reestablishing confidence in the market. The second thing is more movement on the part of government as it relates to some of the cost related
Sure.
things that are within the control of governments, right? Like there are certain things that are from the cost perspective that will adjust as a result of market dynamics, right? If nothing's getting built, you're going to start seeing some relief on the construction cost side of things, right? When it comes to things like development charges, when it comes to things like tax and different fees and things like that that are within the control of the government, they're not reacting to market dynamics, although they should be
Sure. Yeah.
reacting to market dynamics, right? And that's what I hope and expect, that there's some more movement and recognition that part of the bottleneck and part of what gets us through this in a much quicker fashion than might otherwise be, it's not just prices going up, right? It's about restoring margin, and there's always the cost side of the equation as well. And if you can chip away at the cost side, then you just need less price appreciation. And I think that if we can narrow that gap, so I would hope that the government at all levels, they've been talking about it, and some municipalities have already done so with development charges and things like that. But big metros like Toronto, Vancouver, there hasn't been any movement. But I'm hoping that 26 brings with it more consideration on that front, because I do think that will also go a long way in getting us back to a more sustainable path.
Okay, so as we're sort of talking about some of these hopes and expectations, and obviously yourself and Greybrook is using these points to evaluate potential opportunities, what do you see really emerging in 2026, and where do you think Greybrook is really going to lean in?
Yeah, so the answer to that question, unfortunately, isn't going to be anything revolutionary. I think people, everybody watching can let out their breath. We're going to be buying land as one of our main strategies, and we always buy land. I think now in these conditions, I'm more excited about it because if you're buying land today, whenever you're buying land, it has to be reflective of the prevailing market realities, right? So when we buy something, even in 3 years ago at the peak of the market, you're doing your math on sort of like, what can I pay for this land today relative to what it cost me to build something and what I can sell it for. And that's true all the time. So when you're doing it in a market like this, where I think we're as close to a bottom and a turn as we've been over the last couple of years, then you're buying land, I think, at prices that have a lot more upside than downside. And I probably talked about this ad nauseum at different points in time, but it's true. Like it's what am I excited about? I'm excited about buying good properties at prices that I would have paid in some cases in 2006,
Sure.
right? And so what does the market recovery look like? I don't think it's a straight up hockey stick explosion. I think it's a much more orderly and sustainable uptick and sort of growth trajectory. But that means that if I'm buying something today that makes sense today,
Sure.
In kind of like a real difficult spot, then I probably have a good chance to outperform that. So in this strange way, we have a huge real estate portfolio, and you look at some things retrospectively, and you think to yourself, of course, hindsight's 2020. Like nobody sees certain things happen in the market, but you hold it, and you have to deal with whatever that is today, right? A condo project that you can't launch into the market because nobody's buying condos. But then you're going to go out and buy another condo site, and to some people that might be like, well, how does that make any sense? Well, my cost basis is very different,
Yeah.
right? And if I could make the math work at whatever crappy price it is today in the market that virtually doesn't exist in Toronto, then as the market recovers, I probably should see margin expansion rather than margin compression. So that's something I think we're going to really lean into. Now, it's easier said than done, right? I mean, we're not finding these types of opportunities in abundance.
Sure.
Because at the scale that we operate, generally speaking, people that own these types of properties have the ability to hold them, right? And more than likely, they're going to hold them.
Yeah.
But every now and then, you can either find a particular circumstance, or you can assemble properties and create an opportunity that looks really, really attractive by today's measurements.
Yeah, I think if something is available in abundance, it naturally isn't an opportunity, right? I think that part of the value that Greybrook brings is that we're the curator of some of these opportunities.
Very true, yeah.
Looking to something a little bit different for our audience here, I want to talk a little bit about the culture at Greybrook. So when you think about Greybrook and sort of our personality as an organization and the people and the culture, how do you find that influences decisions you've been making for 2025 and as we head into the new year?
I don't know if there's an influence on decision making per se, because I think our culture has been similar for since we started the place, right? 21 years now, right? We have a really strong culture, and I think, I some people may know, but I used to play hockey at a pretty elite level, and that dynamic of what the team was, and what made teams great was an exceptionally high care factor for the cause, which used to be winning championships, and today it's serving our investors and our partners. For all the people in the room, right? So having a huge care factor for your colleagues, and then everybody understanding their role and responsibility, right? Like those three things together make an exceptional team. And I think not really by design, but that's kind of how this place evolved, right? With Peter and I and the people that we brought on from day one to today, almost as much as their credentials on paper. And we have some incredibly credentialed people and intelligent people, but
Sure.
their personality and how they can gel within this team was as important a factor as anything else. So that, I think, has been largely accomplished. So as I look at today, to your question, I don't think it's changing how we make decisions. It's always been embedded in how we make decisions, good markets, bad markets, and everything in between. So I think that's something I'm really proud of, and I do think that we have one of the most exceptional cultures. Probably shouldn't be asking me that question. Maybe I think we do, but
You're not
I
biased.
think if you asked around, you get the same answer. But but I think that has really helped, because when I go to work every day, I feel like I literally go to work with my best friends, right? Like, I mean, this is who I spend my time with at the office. It's who I spend my time with outside the office. And I think that makes harder circumstances and harder markets a lot easier to deal with.
Yeah, I completely agree. Your sort of, Sasha Cucuz, your personal message as we wrap 25, head into 26, what do you want to leave our investors and stakeholders with?
Well, I would say that, the challenges that the industry faces and that this asset class faces are, temporary in nature. And, it sounds like a cliche thing to say, but, we've always believed in the fundamental investment thesis, because at the end of the day, people need housing and they will continue to need housing. And if all of the things don't align, governments and market demand and things like that, then we're not going to have any housing.
Yeah.
So they figure themselves out,
Yeah.
whether that be proactively or sort of as market forces change. But you have to be patient with these things. And I think, if I've learned anything, I don't know, back to your prior question, we have a healthcare side to our business, and that's something that not a lot of people know. But you invest in operating companies, and that's a very different thing than investing in real estate. And you see within these operating companies, particularly, there's a couple of them that we've taken public, and then you see sort of how they react in equity markets and the ebbs and flows of these things. So I think that you really learn how important it is to be patient, because sometimes public markets focus just quarter to quarter on things, and that short-termism usually leads people to sell at the wrong time and buy at the wrong time, right? And I think in real estate, it's always been a long-term game. And I do believe that that's the biggest takeaway, is just notwithstanding hardship that you have to deal with, withstanding the complexity at the moment, it's really about understanding the long-term vision and the long-term investment thesis and sticking to it and being very steadfast in that. And that's, for that, you require some patience. So if I had to ask for anything, it would be, for people to try and see it that way, and be patient, because we're in some cases only halfway through the game ultimately.
Yeah, and I mean, listen, Greybrook has 21 years of case precedent to lean back on and sort of say, we've seen some cycles and we've seen some things. Sasha, really appreciate it. Jay's 26.
26.
26.
Yeah, we were close.
Happy holidays and safe holidays to all of our viewers, and we'll see you in 26.
Perfect. Yes. Happy holidays.
Thanks, guys.